Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about CHERY Auto interim report. CHERY Automobile Co., Limited offers a diverse range of businesses and services, including designing and developing passenger vehicles, manufacturing and selling internal combustion engine and new energy vehicles, providing KD kits, engines, transmission systems, chassis, spare parts, and components, offering other automotive parts and components, product development, supply chain management, manufacturing, quality assurance, after-sales, services, exporting products. The company operates under 5 brand names: CHERY, JTOUR, EXED, ICAR, and LUXED. The CHERY Auto stock price has shown no significant changes over the past year, contrary to expectations. However, this is not due to a lack of movement or decline, but rather a strong positive debut on the Hong Kong Stock Exchange in 2025. Several factors contributed to this robust performance and subsequent stability. CHERY's successful IPO was the largest automotive listing of 2025, raising $9.14 billion and priced at the upper end of its range. The company demonstrated significant financial growth, with operating revenue increasing by 70.7% and net profit rising by 57.1% from 2022 to 2024. CHERY's dominant sales performance, particularly in new energy vehicles, NEVs, also played a crucial role. Its NEV sales grew by 267.4% in 2024, ranking number 1 globally among the top 20 passenger vehicle companies. Institutional investor confidence was high, with 13 cornerstone investors participating in the IPO. CHERY's diversified international presence, spanning over 100 markets, also contributed to its stability and appeal. This diversification helped mitigate risks associated with regional market fluctuations or geopolitical challenges. Overall, these factors have maintained a stable stock price for CHERY Auto over the past year. The primary drivers of revenue growth for the company are multifaceted and can be categorized into several key areas. Firstly, the sales of passenger vehicles have increased by 26.6%, while automotive parts and components have seen a significant surge of 77.1%. The company's technological innovation has also enhanced its product competitiveness and market recognition. Furthermore, the growth in passenger vehicle sales has driven an increase in demand for related components and parts. Additionally, the release and sales growth of NEV vehicles have contributed to revenue growth. Business expansion into domestic and overseas markets has also played a significant role. On the other hand, the primary drivers of revenue decline are largely attributed to a decrease in certain automotive-related production and supporting services. The company's gross margin has also decreased due to increased revenue contribution from NEVs with lower profit margins. Net income and profit margins overview. The company's net income experienced a significant increase, rising from RMB 7,898 million to RMB 9,906 million. However, the profit margins showed mixed results. The gross profit margin decreased by 2 percentage points to 13%, while the NEV new energy vehicle gross profit margin increased substantially from 1.4% to 5.2%. This indicates that the company's focus on NEVs has led to improved profitability in this segment, but overall profit margins have declined due to decreased margins in other areas, such as passenger vehicles. The company's financial performance indicates a strong ability to generate cash from its core operations. A net cash inflow of RMB 14,004 million from operating activities is a significant indicator of the company's financial health. This positive operating cash flow suggests that the company is capable of meeting its financial obligations and investing in growth opportunities without relying on external funding sources. The company's debt level and interest expenses have undergone significant changes. Initially, the debt level decreased by RMB 5,091 million from 2024 to 2025, suggesting a reduction in liabilities. However, this trend is contradicted by the carrying value at the end of period, which increased to RMB 27,337 million in 2025, compared to RMB 21,156 million in 2024. Regarding interest expenses, there has been an increase of 22.5% from 2024 to 2025. Furthermore, the interest paid for interest-bearing bank loans and other borrowings also saw a rise, from 1,038 RMB million in 2024 to 1,288 RMB million in 2025. These changes indicate that while the debt level may have increased, the company is still facing higher interest expenses. Management's outlook: focusing on inventory management and sales growth, the company is committed to maintaining its focus on two key areas: inventory management and sales growth. This strategic approach will enable the organization to optimize its operations and drive revenue expansion. Notably, there are no plans for significant investments in material assets or capital expenditures, indicating a cautious yet deliberate approach to resource allocation. By prioritizing these core functions, management aims to sustain momentum and achieve long-term success. The company has a history of paying out dividends to its shareholders. In 2025, it distributed a significant amount of RMB 3,993 million in dividend payments. This indicates that the company prioritizes returning value to its investors through regular dividend distributions. That concludes the financial summary for CHERY Auto. Feel free to comment below, and I will be happy to answer them when possible.